Have you ever stopped for a moment and wondered what it would look like if the financial system itself tried to warn us before it collapsed? Because right now, it is not whispering, it is screaming. And very few people are listening. There's a signal out there, one that has appeared before almost every single financial catastrophe in modern history. It showed up before the Great Depression, before the dot-com collapse, before the 2008 global meltdown. And it's flashing again right now. It's called the yield curve inversion, a simple line on a chart that, when it flips upside down, has predicted every major recession for the last century. But this time it's not behaving like a normal inversion. It's not just a warning. It's something far more violent, deeper, longer, and more extreme than anything we've ever witnessed before. What's coming isn't just another downturn. It might be a once-in-a-lifetime reset, a global unwinding of illusions built over decades. Something far worse than 1929, worse than 2008, and worse than anyone is ready to imagine. So stay until the end to understand what's really happening. Leave a like and let's start. To understand why this matters, we need to go back in time. Picture the late 1920s. The world was dancing on the edge of a golden dream. The stock market was unstoppable. People believed they were entering a new age of endless growth. Everyone was buying on margin, borrowing money to chase even higher profits. Newspapers spoke of a new era, one where prosperity would never end. But in 1928, something subtle changed beneath the surface. Short-term interest rates quietly climbed higher than long-term ones. That tiny shift meant that investors were demanding more return for lending money for a few months than for several years. That's backward. It's like charging someone more for borrowing your car for a day than for renting it for a year. And when that happens in finance, it's a sign that something is terribly wrong. It means liquidity is drying up, that money is getting tight, and that fear is building behind the curtain. People ignored it. They always do. The market kept rising for nearly 2 years after that first inversion. Everyone was convinced that this time was different. But then in 1929, everything fell apart. The Dow Jones collapsed by more than 80%. Banks failed by the thousands. Unemployment exploded. And the world learned that when the yield curve screams, you'd better listen. Because it's not a prediction, it's a countdown. Fast forward to the early 2000s. The internet had taken over the world. People believed technology would rewrite the rules of economics. Stocks were soaring again. Investors were fearless. And then, quietly, the curve flipped once more. It was the year 2000. And just months later, the dot-com bubble burst, erasing trillions of dollars in paper wealth. Then in 2006, it happened again. This time before the housing crash. The yield curve inverted, sending the same silent alarm it always had. Economists brushed it off. Politicians said everything was under control, and investors kept buying. A year later, the entire global system began to collapse. Now, here we are again, but this time the signal is unlike anything in recorded history. In 2022, the yield curve inverted once again. And it has stayed inverted ever since, longer than any period on record. Not just slightly, but severely. The gap between short-term and long-term rates has plunged to levels so deep they make 1929 and 2008 look tame by comparison. This is the deepest inversion in over a century, and it's happening in an environment where global debt is higher, leverage is greater, and risk is hidden in every corner of the financial world. And yet the surface looks calm. The stock market is still climbing. Unemployment is near record lows. The media keeps repeating that the economy is strong, resilient, and different this time. But that's exactly how it looked before every single major crash in history. The calm before the storm, the illusion of safety before the collapse. Because the yield curve doesn't lie. When it inverts this deeply, it means that investors, the people who move trillions, are so terrified of the short-term future that they would rather lock up their money for a decade than keep it available for 6 months. That is not optimism. That is panic. Just a little break, I opened a free Telegram community where I teach how to earn money with YouTube and build channels like the one you're watching. If you want to understand how to do it, there's the link below, back to before. Back in the 1970s, yield curve inversions led to recessions almost immediately. The moment the curve flipped, the economy cracked. In 1973, oil prices exploded from $3 to $10 a barrel in just months. Inflation surged, the economy froze, and a brutal recession followed. The same pattern repeated in 1979. The signal appeared, and within months everything began to break. But today something strange has happened. The signal has been flashing for years, and yet the crash hasn't arrived. Not yet. To understand why, we have to look at what's been holding it all together. After the pandemic, governments injected trillions of dollars into the system. Families were left with record savings. For a time it worked like a shield, protecting consumers and businesses from the real pain underneath. People kept spending, companies kept hiring, and it seemed like the system had found a way to escape gravity. But that illusion is fading fast. Those savings are now gone. Credit cards are maxed out. Loan delinquencies are rising. The invisible armour that kept the economy standing is cracking piece by piece. And once that buffer disappears, the real consequences of this inversion will finally begin to show. Because make no mistake, this signal is not random. It's the financial world's equivalent of a smoke alarm. The deeper the inversion, the more violent the explosion that follows. In 1929, the inversion was mild. The crash was devastating. In 2008, it was deeper. The collapse went global. Now the inversion is the most extreme we've ever seen. What do you think that means for what comes next? This is not just about the bond market, it's about the entire structure of modern finance. Think of the yield curve as a window into how people perceive time. Normally, the further into the future you lend money, the more risk you take, so you expect a higher reward. But when the curve flips, that logic dies. Investors stop worrying about the future and start fearing the present. It's a sign that the short term, the next few months, is seen as more dangerous than the next 10 years. That's not stability, that's pure anxiety. And this anxiety is justified because today's world is built on layers of leverage, so interconnected that one failure could trigger a cascade across the globe. Back in 1929, household debt was a fraction of what it is now. In 2008, most of the risk was concentrated in housing. Today, it's everywhere. In consumer credit, in corporate bonds, in government deficits that no one can ever realistically repay. Every nation, every bank, every company is swimming in borrowed money. And when interest rates stay high while debt keeps rising, something eventually has to give. A family that spends more than it earns can keep up the illusion for a while. A government can borrow endlessly until confidence breaks. But eventually math wins. And when math wins, illusions die. That's what the yield curve is showing us right now. It's the invisible countdown to when the numbers stop adding up. The strange part is, people still think they're safe because the market hasn't crashed yet. They look at rising stock prices and assume it means strength. But that's exactly what happened before every major collapse. In 1928, stocks kept climbing for nearly 2 years after the inversion. In 2006, markets hit record highs even as the curve screamed danger. The longer the delay, the greater the destruction when it finally breaks. Because each extra month of denial allows the bubble to grow bigger, the complacency to spread further, and the collapse to become more violent. Right now we're living in that dangerous calm. Corporate bankruptcies are quietly increasing. Consumer defaults are ticking higher. Small businesses are being crushed by loans that cost twice as much as before. Governments are running deficits so large they would have been unthinkable even 5 years ago. And yet the narrative remains, everything's fine. But deep down, people are starting to feel it. Prices that never come down. Jobs that pay less than the cost of living. A sense that something invisible is tightening its grip. The yield curve isn't just a number, it's the heartbeat of the economy. And right now, that heartbeat is irregular, unstable, and signalling distress. It's like the body's vital signs going haywire while the patient insists they're fine. And history shows that every time the curve inverts this long, the patient doesn't recover, not without a collapse first. If we look at the timeline, the inversion before the Great Depression lasted around 17 months before everything imploded. The one before 2008 lasted 16 months. Today's has lasted far longer. That puts us not at the beginning of danger, but right near the breaking point. The setup is eerily similar. Low unemployment, high confidence, rising markets, and a complete blindness to risk. It's the same movie, only this time with a global cast. Because this inversion isn't just in the US, it's spreading through Europe, through Asia, through emerging markets, connecting every corner of the world through one shared signal: fear. And when a global inversion happens, it doesn't just signal a local recession. It hints at a full-blown monetary realignment, a structural reset of how money itself flows. Because debt connects everything. When it becomes unpayable, the entire system has to change. It's happened before, but never at this scale. Every government, every central bank, every investor is now trapped in the same paradox. They need low rates to survive, but low rates fuel inflation. They need high rates to control prices, but high rates destroy credit. There's no exit that doesn't hurt someone. And that's why this time may be worse than anything in the past. Because there's no easy fix left. Oh, and I want to remind you that if you want to build a YouTube channel like this, I can help you in my free Telegram community with the link below. For now, the calm continues. But calm is the most dangerous sound of all. It lulls people into believing that the storm has passed, when in truth, it's only gathering strength. In every previous crisis, the moment before the fall looked almost identical to today. People said the same words. It's different this time. But the laws of economics have never changed. They only hide, waiting for arrogance to make the same mistake again. And when it comes, it won't feel gradual. It will feel sudden, as if everything shifted overnight. But the truth is, the cracks have been forming for years. The yield curve saw them long before we did. And that's what makes this moment historic. Because never before has the warning lasted this long, gone this deep, or been this global. This is not just another inversion, it's the inversion. The one future historians will look back on and say, that was the moment when everything started to unravel. So what can be done? The answer isn't panic, it's preparation. The yield curve doesn't exist to scare people. It exists to tell the truth before it's too late. To remind us that behind every boom lies a reckoning, and that ignoring history doesn't erase it. Those who understand the signal will be ready. They won't be caught in the collapse, because they'll see what others refuse to see. And when it happens, when the illusion finally breaks, it will feel like the end of something massive. But as with every collapse in history, it will also be the beginning of something new. The Great Depression gave birth to the modern banking system. The 2008 crisis reshaped global finance. And whatever this next phase brings will change the world again. What's coming won't just repeat history. It will rewrite it. Because this time it's not just markets or mortgages or stocks. It's the entire structure of money, of trust, of debt, all trembling under the same invisible force that's been building for decades. The once-in-a-lifetime yield curve, inversion, is not just a financial event. It's the sound of the old world cracking open. And very soon, everyone will hear it. Like everyone will hear of this channel, and you will be proud to have subscribed now. Smash that subscribe and like button. Let me know your thoughts in the comments. And I also want to remind you that if you want to build a YouTube channel like the one you're watching now and make money from it, I opened a free Telegram community with the link below. See you there or in the next video. Just a reminder, I'm not a financial advisor. This video is for educational purposes only, and any results depend on your own decisions and actions.